Hi there, Serial Trader here. I'll do an update on the major US indices, and let's get right into the wave count here on SPX. So on the daily chart, now since my last video, I was proposing that we had the B wave of what could possibly be this larger wave 2 in place, and we were heading down in C. Now we were initially heading down, but we did not actually go and take out that A wave low. And we've actually bounced up and made a marginal new high. So what do you do with that? And I think you just simply allow for this to be part of a larger, more time-consuming, complicated B wave, as long as we don't take out this prior high, the origin of A, which is at 32, 33, 13, which we have not done that. So I'm still viewing this as an initial 5 down for A. This has been a more complex 3-wave move up for B, but it still has a distinctive 3-wave look, and more importantly, we haven't actually taken out the origin of the pattern here, the origin of that A wave. And now the expectation is still to come down and make a new low in C, but we basically just had to do some short-term adjustments here. Now let me go to the hourly chart before I get too far into this daily here. So let's do a little updating on the hourly. So importantly, we still have a clean or a fairly clear 5 waves down, which I'm still considering that initial wave A down. Now this is the part where we have to make some adjustments. So you can see I still have some labels up from my last video where I was potentially working this as the initial 1, 2, that was perhaps 3 of the larger C, and we're gonna have a little bounce up in 4, and then one more move down in 5 to complete C. Well, we did start bouncing up in 4, and up until a certain point, it still looked like it could have just been the 4 of C, and then we'd be looking for that final move down in 5 of C. But as soon as we overlap this area here, I began throwing this count out, because obviously you can't have 4-1 overlap in a impulse sequence, 5-wave impulse sequence. And then of course we went all the way, and so far have just marginally taken out the high. So let's delete these C labels, sub-labels, because right now we're still potentially in the final throes of this B wave. So let me just clean this up a bit. So really, as far as a trade went, it was still a good idea to get short up here. I believe on ES I got short in the low 3100s. I did take some profits, as I mentioned in my last video there. So that was a good enough trade, you know, basically captured 100 points or so on that portion that I closed, and then I had a stop just above the equivalent level on ES here in the 3080s. So the remaining position got stopped out, still better than where it was entered by, you know, maybe 20 or 30 points. So it was still a successful trade, but the analysis didn't quite work out as originally anticipated. But I still think we're onto something here. So let's just relabel this. So let's just call this now. That may very well have been the B wave peak there on Friday. I'm not that convinced. I suspect we get one little more pop up here. And the reason for that is just looking at the shorter term wave structure. I suspect you got a 1, 2, then you got 1, 2, 3. This is probably all of that 3, I'm suspecting. Maybe that's 4. And then we got one more pop up in 5 for the C of the B. So let me just get a few more labels up here. Should probably drop this down by 1 degree. So just bear with me. So yeah, what I think we got going on here, this is our, let's call that our A, B, and C of the B. Let's get this degree correct. I think that's what we're working. We have the initial, and it looks a little cleaner when you look at the futures as far as this initial move up being a 5. Because we have some missing data in here from overnight action. But 5 up for A. This complex mess, we'll call that 3 down for B. And I mean, you could go some sort of complex, maybe a WXY for B. And then 1, 2, 3, 4, 5 for C of the B. So I think we're very close, if not at, the B wave termination point once again. And if we just go, again, get our fib retracement of that initial A wave down, and we still haven't actually quite done the, let me just leave the 786 up there. Hang on. We still haven't actually quite done the 786 retracement, which on SPX will be 31.75. So if this is just a little short-term pullback there on Friday for four of C of B, maybe we'll get one more little move up there to that 786, that 31.75 area. And let me just do a little reverse fib. If this is just an ABC down, do a reverse fib levels, 1.382 and 2. So yeah, the 1.32 gets you right around that 786 retracement level. So just a thought. But yeah, that's really what I'm working here as far as a little update wave count. And then of course, once that completes, likely early next week, maybe Monday or Tuesday, we'd be looking at finally getting this impulse wave down in the larger C, okay, the long-awaited larger C. So that's just a thought there. That's my best take currently on what we got going on. Let me just adjust the degree on that. Yeah. So this is my best take currently. Initially called the larger C a little too early. This developing complex B certainly was full of tricks, and you can just see the frustration in the chart. You know, bears, well, especially if you're a late bear and you're selling down here looking to take out that A, which wasn't so unreasonable at the time. You basically sold near the lows and then immediately ripped up in your face against you. And also, let's say you were a bull here saying, you know, okay, we got initial move up, a little consolidation. Okay, we're starting to go back up again. Say you bought up here looking for this breakout, and immediately it dumped right against you all the way down to nearly the prior lows there. And now again, we've ripped up in what's likely this C of B. And if you buy up here saying, okay, yeah, finally we're breaking all this consolidation, you know, we're going to go take out these old highs and start trending again. You buy up here, and then, you know, probably sometime early next week, it's going to start dumping against you. That's my best take currently. So you can just see the frustration, max pain for everyone, other than, you know, very, very astute traders. But that's what the pattern is. It's meant to frustrate, and then finally you get the resolution. And in this case, we're looking for that C wave down. But I'll leave it there. I think I've explained my take here in fairly good detail. Now back to the daily chart. We can redraw. Now this channel might have to change slightly because perhaps we go a little higher early next week for this B wave, but let's just say it's in place. So I'll redraw the channel. We can redraw some fib projections, AC relationship there. Let's go for equality. And you can see we're still looking for, I mean, bottom line, we're still looking for a move down below that A wave extreme at 29.65. How much lower we go below that? I mean, again, we still have these same targets. The gap fill at 28.65 there. We also have this gap fill at 29.56. We have the equality relationship, which is now adjusted for this new action right around 2900. It's 28.98. We have the 382 retracement, 28.35. And then if we go deeper, we got the previous fourth at 27.66 and the 50% retrace of the whole move up at 27.12. So overall, the targets haven't changed much, but this has just delayed what I still think we're going to get here in a C wave. Now, as far as the duration of this B wave, let's go back to the hourly chart here just briefly. So if we do the time relationship, now let's do a couple other time relationships. So that's the 2 times, 3 times, see if we got anything here. So this B wave has lasted over 3 times so far the length of this initial A wave. So a more time-consuming B. Not seeing any real relationships sticking out as far as timing goes, but yeah, that's all I want to mention. Not unusual for a corrective wave. So again, we have a motive wave down in A, so a 5-wave impulse motive wave down in A. So a corrective wave, so a wave against that one larger trend, which in an ABC down, the larger trend is down for that pattern. Not unusual for that corrective wave to be a lot more time consuming than the motive wave, and we've certainly seen a lot more time consumption, a lot more choppy kind of action in a B wave. So the personality of the B wave is certainly not unusual, but it's still, when you're trying to call it in real time and trying to trade it in real time, the frustration, it can certainly still happen. Okay, that's all I wanted to go through there. Now let's go over to, I think I've gone through what I want to here on the overall wave count. Let's go over to Thinkorswim, because I have a proposition here. Before we do the the candlestick look here, I want to do a potential trade idea as early as Monday or sometime early next week, Monday or Tuesday. I'm thinking as far as entry. I haven't made this entry yet myself, but I'm certainly interested in doing so. Now, since we got our A down, B up, looking for the C down, probably within the next couple weeks, you expect that C wave to play out. So I'm looking at the SPX, and I'm actually looking at doing a put spread. So the 17th of July, so roughly 2 weeks out here, 2 trading weeks. Look at the 17th of July SPX options. Scroll down here, and I'm thinking about the vertical, buying the vertical spread, put spread, SPX. So I'm looking at the buying the 3000s and selling the 2950s. Okay. Now I haven't determined what contract size I'll use, but let's just use 10 currently as an example. And let's go analyze this on the analysis section. And let me just change the scale here a bit, make it a little more visually appealing. Commissions, okay. Now, so the max risk of this trade at the current size of 10 contracts bought and 10 contracts sold. Now, again, we're buying 10 of the 3000 SPX puts, selling 10 of the 2950 SPX puts, and I'll explain the reasoning behind this. But the total cost would be right around $6,000, $5,900 or so. Max reward would be $44,000, and you might get different pricing on Monday, but this is just based on the most recent pricing of these options. So it should be roughly what you're looking at there early next week. So that provides a very good risk-reward relationship. So max risk under 6,000, max reward a little over 44,000. That's an incredibly good ratio. But let's just make this, let's say you're dealing with a smaller account, which I'm sure lots of people certainly are. Let's just make it one contract. So I've just cut the size, I've divided the size in 10 there. So instead of 10 contracts, just one contract bought, one contract sold. Max risk is now just over $600. Max reward is over $4,000. So again, an excellent ratio. And basically, the max reward will be realized if on, basically at the end of the trading day, on July 17th, so the Friday, if SPX is at or below 2950, you'll see that max reward potential. Break even for the trade, if SPX is basically sitting at 29.33, you'll see, no harm done, basically a break-even trade. And then anything above 29.33 begins to get you to the loss, and then anything above 3,000 there, which is the strike price that's been bought. So the long put versus the short put. So anything above the strike of the long put would be your max risk at expiration, right? So just a visual of what we got going on there. But let me explain why this is such a good risk-reward ratio, and it certainly is. You're basically taking advantage of the volatility skew that involves, or that is in SPX options. So the farther out of the money you go in the puts, the higher the implied volatility, okay? So the implied volatility of the 3,000 strike put here is 26.34%. The implied volatility of the 2950 strike put is 28.52%, and it just keeps going up the lower you go. So there's that volatility skew that's in your favor. So you're selling the option with a higher implied volatility than the option that you're buying. So that gives you a more attractive spread, okay? That gives you a lower debit to achieve the spread to get those two options into a vertical situation like that. So I think that's a pretty smart way to play this. I also plan on selling some futures. I'll mention that in a moment here. And that's just a conventional, sell the futures, put in a stop, and that's that. This is a little more complicated in case anyone's not familiar with options trading, but it's not that bad. It's still just a two option position. So you're buying one option, selling another. So it's just a vertical spread. It's not that fancy, but I think it's quite appropriate in this situation. I mean, again, you're mathematically, let's just leave the one contract size on here because that's probably realistic for a lot of people. You're maxing, you're risking in this case around $600 with the potential to make over 4. And then of course, this purple line illustrates, like say we start getting a nice move down quickly, you're not going to make the max profit right away, even if you go, below our 2950 or 3000. But you can see you still have a pretty good profit profile here. So let's say we dump next week down to below 3000. Well, we're still going to be up. So right here, 2977, we'll still roughly be at 1,400 or so, maybe 1,500 of profit versus our initial debit of 600. So that's still a great return, even though you don't necessarily have that ideal scenario of holding it right to expiration and having it, be below both the strike price at expiration for that max profit. That's like a theoretical scenario. It could happen, but more realistically, if you get that big move, you're not going to wait around, hoping it doesn't bounce against you all the way to expiration. You're going to follow the chart, say it looks mature. Say we go down here, start dumping next week, take out the A wave low in short order. Say we get, we can count a little 5 waves down complete already. There's still another week or so left on the option. Well, you're not just going to keep holding it because we might get that C wave bottom in place and start rallying up in the third wave. So you still have to manage the position. But what this really shows you is just kind of the theoretical risk return profile, and it's quite favorable. Even leading up to expiration, you can see that your risk is still extremely limited just to that initial debit of, around $600 based on these prices. And if we get even down to 3,000, you're, roughly at a double. And if we go down to 2,900, you're starting to get into like triple or quadruple territory. And that's way before expiration. So just a thought. Definitely a put debit spread that I'm keenly eyeing up for an entry early next week. And let me just quickly go back to the trading view chart here. So on the hourly, like I said, looking for this little potential fourth wave of CFB to finish and then pop up early next week, like Monday or Tuesday. I mean, this could happen like partway into the day on Monday. It depends how things go, right? That would be my ideal entry. And then, of course, if we actually went above the 32.33, regardless, I would close the position and it would still have some value because there would still be some time left on that spread. So it wouldn't be the max loss. But that would be kind of the mental stop on the spread. And this would be my ideal entry. One more little pop up in 5 of C, put the spread on, and then let this overall C wave play out to the downside, over the coming couple weeks. That's the idea there. Anyway, I guess since I'm here, so early next week, if I see that pop up, I'd like to sell some ES futures short, put the stop above the relative high there, that June 8th high, and then again looking for a move down to below that A wave extreme. But I mean, that's a more simplistic trade, just long or short futures. Doesn't require nearly the same explanation, I don't think. Okay, now back to this chart. So I think I've shown you what I want to show you here on the option chain and the risk profile of this proposed put debit spread trade. And again, just to reiterate, so expiration date 17th of July. Those are the weeklies. Now there are some Julys that expire the morning of that day, but I'm going with the ones that expire after the end of trading that day. So those are the weeklies. These ones are the the special morning ones. Don't worry about that. Just so you have the right option chain to look at in case you're going to look at this yourself. And what else to mention? And yeah, as far as size goes, that's totally up to you. I might be looking something more like 10 contracts, so maybe $5,000 or $6,000 risk, max risk. But if you size it down to one contract, I mean, most people's trading accounts can afford $500 or $600 risk. It's pretty reasonable. Okay, and again, strikes: buying the 3,000 SPX put, selling the 2950 SPX put. And yeah, that's all I wanted to mention, I think, on that potential trade. So let's go look at the daily chart here in SPX. So we did get a marginal new high. Looks like a fairly large upper shadow rejecting those higher prices. You can see this kind of area has been rejected multiple times. We've actually filled that island gap. So to fill the island gap, we had to go here for it to still be an island. That would have to be unfilled. So now we filled that. So that was 3163.84. We went a little higher at 3165.81. So the island gap has been filled, although a fairly nice rejection from that gap fill. There's a higher gap to fill here should it happen, and that is right here, and that would be at 3181.49, and that is probably quite close to the 786 retracement. And yes, the 786 retracement actually falls between those two gaps, right underneath that upper gap fill there. So just some areas to look for next week to potentially be touched for a good entry. Again, I really hope we get a nice entry like that, because that would be great for selling the futures. You get a nice tight stop. We go up to 3180 something, put a stop against 3120 something. I mean, you're looking at a 40-50 point risk for potentially 200 or 300 point move to the downside. That's a nice risk reward setup on the futures. Just worth mentioning. Okay, I'll get rid of that. Where was I going? Oh yeah, so kind of you see a pattern once we get into this zone here. Some upper shadows on these candles. So certainly rejection of these higher prices. I think that's a bit of a tell that this overall pattern is looking to roll over here once it completes. Okay, let's go to the weekly chart. So on the weekly chart, nothing really there. Kind of a bullish candle. Non-engulfing though. It didn't actually open low enough. So again, just kind of you can see on the weekly here, we had this initial reversal candle down, and now we've just kind of been going sideways, consolidation pattern. Somewhat prominent upper shadows on the candles, more so the last 2 weeks, not this current week. So not much there on the weekly as far as signaling. But daily, looks like we still want to go lower here, starting to reject these higher price levels just as we did before. Okay, that's SPX. Now on the Dow has been notably weaker. We haven't actually even come up to make a new high in the Dow. So the pattern, a little different as far as the nuances go, but same idea, looking to go down below this initial, we'll call it the A-wave low still on the Dow. 24,843, looking to take that out. Okay, and I guess you could say Friday was a bearish candle. Kind of looks like an inverted hammer. Large upper shadow, closed near the low of the session, that sort of thing. Weekly candle, what do we got? Weekly candle looks more bearish on the Dow as well. A weekly inverted hammer. So the Dow, I mean, if you want to short the Dow, since it's the weaker one, that's not necessarily a bad idea. There's the DIA ETF, the diamonds. That's an ETF you can play for shorting or buying put options. And there's certainly the Dow futures as well, although I don't typically play them. Just a thought. Okay. All right, that's fine. Let's go look at the NASDAQ. NASDAQ composite. Honestly, I don't really know what's going on with the NASDAQ composite. I don't have a clear read on the pattern or what, wave pattern we're working here. It's just beastly. I mean, if you're trying to short something, I just don't think the NASDAQ's your best candidate. It's just showing too much strength versus the other parts of the market. So short something that looks like it actually wants to go down. The NASDAQ just doesn't look, at least this could change, but currently the NASDAQ does not look like it wants to go down. So for me, this is just kind of a watch and observe, but I don't see what you can do with this. I mean, how in your right mind could you go long? This is so extended to the upside. The risk of a sharp reversal is obviously high. But how can you go short when, every time it goes down, it just keeps making a higher low so far and then a higher high. So NASDAQ, don't know what's going on here. Very bullish, but also very extended, so risky. No touch for me. Not until I see a pattern that makes some sense to me. Okay, now on the weekly on the NASDAQ, anything here on the candle? Nothing. Is that a bullish engulfing again? Let's see here. Closed at 97.57.22, open at 97.70. Okay, so it didn't open quite low enough for this to be another bullish engulfing, but you can see that's certainly not a bearish looking weekly candle. That's for sure. Okay, that's all I want to go through on the NASDAQ. Not sure what's going on with it. VIX. VIX interesting. So VIX has pulled back. So far made a higher low from that previous low at 23.54. And you can see another responsive move off that 200-day simple moving average. So that's interesting. So last time we touched that 200-day on VIX, we had a nice move up. Perhaps we're setting up for a similar sequence. Touch the 200-day and then have another nice move up. Just a thought there on VIX. Not looking to trade it, but worth mentioning. And the VIX tool. Nothing going on here. The sell signal got extinguished. To get another sell signal, we would need to get above the red moving average on VVIX and get below the blue moving average on SPX. And doesn't look like we're at that point yet. So long after, I probably make an entry for a downside move, this will lag, and then you'll get a signal, once we're well underway. So not much going on here, just kind of in a neutral situation. When the market goes sideways like this, so in this case we're in this larger B wave, when you go sideways, a signaling tool like this starts losing its usefulness, at least until you finally get the big move, and then just kind of acts as confirmation. This probably works better in a more trending environment, okay? But currently not seeing much on this. Okay, so yeah, just to put a bottom line on it, looking for potentially a marginal new high early next week. I mean, the high could be in place as of Friday, or sorry, as of yesterday, which was Thursday. There was no trading today, at least not the regular session. A little bit of futures trading today, but it was fairly irrelevant. So yeah, we might have the high in place for SPX on Thursday, but ideally I'd like to see just a little more, short-term upside pop up there, make a short entry, put debit spread on, and then try and catch this long-awaited C wave down over the next couple weeks. So that's the bottom line. Have a great weekend. Serial Trader signing off.